Well, good afternoon, everyone. This is Scott Thompson, and we are here for Stock Investing for Beginners. Big shout out to Alfie, who's out in Melbourne, Australia, or Melbourne. Great to see you in the class. Give a shout out to Cameron May, who's in the chat. If you have any questions, Cameron will be able to help you there. Hello, Will and Sharon and Jay Richardson and Scott Luck and Simone and everybody else that's here today. Hopefully, this will be a great session for you. One of the things that's important is you're building your stock portfolios to have the right tools. And I'm going to load up your toolbox today. So this will probably be a session that you'll want to rewatch just because, in order to get through all the material that I have today, I want to, share a bunch of tools with you that you can use. We're going to do some top-down analysis to help us identify, what to trade. And so we'll jump right in, and in order to do that, we need to go over our important information. Remind everybody the material we cover today is for educational purposes only, not a recommendation of any particular strategy or stock or anything that we cover today. Schwab does not recommend the technical analysis as the sole means of investment research. We are going to be using paper money today, and that's very similar to the real money, but there are some significant changes or differences in the paper money compared to the live money, so be aware of those. We'll be talking about stop losses today as we try to do some example trades. There's no guarantee that the execution of a stop order will be at or near the stop price. And as always, all investing involves risk, including the loss of principal. So let's take a look here. This webcast, Stock Investing for Beginners, we have a series that we go through. We've been doing some bonus sessions over the last 4 or 5 weeks or so. And we're going to be probably focusing mostly on kind of what to buy today. The top-down analysis is part of fundamental analysis, but we're not going to go really in depth in the fundamental analysis. You can go back and watch our session 5. Let me show you where those are. If you go to our YouTube page, just go to the home page and then scroll down a little bit. Right here is our stock investing basics, and here's all 8 of our lessons, and you can watch those at your convenience. They are recorded, and so lesson 5, what makes a good stock. We talked about some fundamental analysis and went over some fundamental terms, and today's kind of an expansion of that. So let's just jump right into our Think or Swim. And very first thing that I want to go through is I'm going to put some notes over here in my scratch pad. You can write those down in your own notes. I have posted a bunch of scripts there in the chat. You'll probably have to scroll up to the top. Cameron's going to try his best to copy those and paste them back in as we go through the different tools. But let's start off here with this concept of top-down analysis and what this is. So top-down analysis is really the process of identifying what's happening in the market and then identifying sectors. Generally, when you're doing that, you're looking for sectors that are outperforming the market. And then from there, some people will take a look at like industries or just jump right into stocks in those particular sectors. So we're going to go market, sector, and then stocks is how we're going to do it here today. So, review the market is usually the first step there. I'll put compare sectors and then, select stocks. That's kind of the overall process we're going to go through. So the very first thing is reviewing the market. When I first started, I was very, confused about how do I identify different trends? And so one of the first scripts that Cameron maybe can go up there and grab is that the sector, or not the sector, but the posture, LT, IT, ST, market trends is the name of it. And let me show you, if you haven't been in this webcast or seen our other webcasts, how to load those. When Cameron puts those scripts in, if you go up here to open shared item, so go top right, and you'll want to do this with the different tools we share today. But go up here to the top right, click open shared item, and then if you just copy and paste that particular link in there and then hit preview, it'll come up, and I think I've saved all of them so that it has the name that will make them easier to find when you're using your charts and that. But SPX, LT for long-term, intermediate term, short-term trends. Usually you'll want to click, at least I like to click open shared items after I import it, and that way it opens up a separate page. And then you want to be sure to save either that chart or the the link that comes up, save it as like a chart study set or a chart style. Okay, so that's first. But let me show this review the market. I have a really simple way that I like to do this. And what I did is I detached my chart. You can detach your charts over here. So I want to pull up the detached charts just in case there's some loading situation going on. But this is what that script that we just shared with you looks like. There's going to be 3 charts. All 3 of them should be the SPX. I've linked mine up just here. You don't have to do that. They're probably unlinked on your page. But you know what we want to do is look at the long-term, intermediate term, and short-term posture. And so I'll go through here as we take a look at these different things. So when you have this 3-grid layout, if you right-click anywhere on that chart, you'll get a maximize cell, and that'll open up the whole page so it's a little easier to see. So, and this isn't the only way to do your market posture, but I find it to be a very simple way. It's a very fast way, and it's helpful in helping us determine, you know, what the market posture or the market trend is. And so the long-term posture, we're on a 3-year weekly chart, and I have a 10-period and 40-period exponential moving average. Exponential moving average just reacts a little more quickly to price action than, say, a simple moving average does. Cameron has a great webcast he does on Fridays called Advanced Charting, and he covers exponential moving averages, simple moving averages, triangular moving averages, a whole bunch of really cool stuff. So check out Cameron's class there on Fridays. But for our purposes here, we're just taking a look at where the 10-period exponential moving average is in relationship to the 40. And the market posture is really simple. The long-term posture would be bullish if the 10-period moving average is above the 40, or we'd look at it as long-term bearish if the 10-period moving average is below the 40, okay? And these are very similar to like a 50-period moving average and a 200-period. So if you think about it, how many trading days are in a week? Well, 5, right? Generally, if it's not a holiday week, 5 trading days, and this is 10 weeks. So 10 weeks times 5, 50. So 50 days. Very, very similar to those. Not identical, but very similar. So here we are. Step number 1. What is our long-term posture on the SPX right now? 10's above the 40. So if we're just going to take some notes as we do this together. The market posture, long-term, bullish. All right. So now we go back over to our chart, and if I click up here on the arrow, this is going to move us to the next part of this grid that we've shared this over there with you. And now we're going to look at the intermediate term moving average. Now, a lot of people have different ways to do the intermediate posture. This is, again, just one of the ways that I learned how to do it. It's not the only way, but I do find it very effective as far as the intermediate posture, and this is how it works. If the 30-period moving average is rising, then we would say that intermediate posture is bullish. If the 30-period moving average is falling, then we'd say that intermediate posture is bearish. And if it's kind of flat or oscillating, then we'd say that intermediate posture is neutral. So, you know, this is often, technical analysis is often in the eye of the beholder, but, you know, what would you say the moving average is doing right now? You know, if I kind of look, I'm looking here the last few weeks is all, and I would say that's generally rising. You know, over here, you can kind of see it was actually down a little bit, but generally oscillating back and forth. And we haven't really had a bearish period here on the 30-period moving average for quite a while. So in this case, I'm going to say the intermediate posture is bullish. So we're going to go here, IT, bullish. Now the short term, this one's kind of interesting. If we go back to the chart here and we click the arrow again, so the short-term posture, and I love this tool. This is like one of my favorite little tools that I learned actually from John McNichol a long way back. It's called Williams Fractal is the name of it. And I went in and then modified the signals a little bit so they were arrows rather than like carrots or little V's and caret thingies. I just thought the arrows was a little bit easier to kind of conceptualize here. And we all know the definition, right? We all know the definition of an uptrend. You guys can chat it in there, but if you haven't heard it before, an uptrend is defined as higher highs and higher lows. Now, higher high prices and higher low prices, that's what it's referring to. And so this particular indicator does a really good job of finding kind of these short-term highs and lows in the trend. And so a series of short-term higher highs and short-term higher lows, we would say would be bullish, and a series of lower arrows, like back over here, we saw the red arrows were kind of going down, the green arrows were kind of on the downward here. We were making lower arrows through this period from October to about November. And we would say the short-term trend was down there. Okay. Now, this is where this kind of is like why this part of this is kind of one of my favorite things, is because one of the common questions that comes up is like, well, when is that trend changing? And so what I want to do here is I want to go just zoom in backwards on this day. And the way this indicator works is we wouldn't see this red arrow until like 2 days pass. That's just how the indicator works. But, so we have to pretend we don't see this red arrow up here. But we know a couple things. At this point, we know where our last little low was. And now some people would say this is a short-term low. Some people might say that the short-term low is really more like over here on the 2nd of January rather than this one. But, my definition, in fact, let me show you. I've got some really cool little YouTube shorts that I did. If you go over here to our YouTube shorts page and scroll down, I did a little more in-depth review on how to identify these trends, short-term highs and lows, the intermediate trend, which we just kind of covered, and the long-term trend, which we also just kind of covered. But these are like little 2 and 3-minute videos that are here that you can watch and get an idea of some more in-depth review. In fact, these links are already in the description of this webcast. They've been in there for months. But if you want to go get some more details, you can go watch these little shorts and review this a little bit. These shorts don't have the Williams fractal, but it does have the concept there. So let's go back over to our short-term higher highs and higher lows. Now on the right side over here, I can kind of visualize that we're making a higher red arrow and we had a higher green arrow over here. You guys see that? And so one of the things I really like about trend analysis is you can say, okay, well, if this is my last low, and again, this is, I have the beholder, right? If that's my last short-term low, then in order for the trend to continue, what has to happen? Well, my next low has to be higher. Does that make sense? In order for the trend to continue, to have those higher highs and higher lows, my next low has to be higher than the last low. Otherwise, that trend, if there's a break in that pattern, that trend could be changing. And something interesting happened today. If we go forward a couple days, for those of you that want some candle theory, go see Barb's Getting Started with Technical Analysis on Tuesdays. This is a hanging man candle pattern. It indicates that maybe, possibly, the market could reverse and start going down for a little bit. Next day is today. Kind of gap down. The intraday low was really interesting. We were trading below the low. So from a short-term perspective, very, very short-term, I'm talking less than 2 weeks, I would say that short-term trend has now gone neutral. But this is also could be interpreted as a hammer candle pattern, which is a bullish reversal candle pattern. And so if the market starts trading above today's high, and closes above today's high tomorrow, then we would say this is a low. And then you could argue, well, is that a similar low or a lower low? And that probably doesn't matter a whole lot. But because we've traded near that low, if I have to squint to see if that's close, it's close. Okay. So what I would do now is go over and determine my short-term posture to be more neutral right now. I could spell. All right. So this is just, again, a quick analysis of the posture. And what I wanted to do is we look at this. Check this out. Now, because I have them linked up here, what I'm going to do is I'm going to go back to our long-term posture. And I want to kind of quiz you guys as we go through on the NDX. And we'll do the NDX and the SPX, and then we'll move on to the next tool or next step. Okay, NDX, hit enter. Now, all three of my charts, because they're all linked up with 9s, all three of them are here now. Okay, so test time, quick quiz time. What is our long-term posture on the NDX? Where is the 10-period moving average in relationship to the 40? Above or below? Yeah, above. Okay, so that means what? So this is SPX here. SPX, let's do this together on NDX. NDX, long-term posture, bullish. Why is it bullish? 10's above the 40. Don't make it any harder than that. Okay, we move the chart forward. Now we've got an oscillating 30-period moving average kind of through this period, and it still feels kind of flat right here. And if we take a little extra step and look at those highs and lows, we can kind of see a mixture of those highs and lows. So I would say the intermediate posture on the NASDAQ is probably more neutral. Okay, that's just me. So we're going to write that in here. Okay, intermediate posture, neutral. Okay, short term, what's our short term? Well, let's go back to that chart. Let's move it forward and we'll get those fractals. And what are we seeing here? Well, it's pretty obvious over back here in October, November, we did see some series of lower lows and lower highs on these arrows, right? You could see them kind of going down, down, down. Lately, though, what are we seeing? Well, we've seen some higher lows, but we've seen a high here and then a lower high and then kind of a little bit higher high intraday, but actually looks like about the same close. We don't have that fractal up here yet, but if we get another down day or another close, we'll probably see a red arrow here. So we're getting a mixture of those arrows. And so anytime, we're not making higher highs and higher lows, if it's a combination of like a higher high and then a lower high and then a higher high and a higher low, that's all neutral. Okay, so if we go back here and now our posture on NDX is neutral. And you could actually do this with any stock. I'm doing it on the major indices right here just because that's kind of the purpose of our class today. All right, but you could actually do that process on any stock. So let me see if there's any questions in here. I don't see any questions, but I do see a survey. So, the survey has like 2 questions in it, an opportunity for you to fill in some, some information for me. So, if you are seeing things you like, let me know. If you'd like to see different things, let me know. But if you take a minute to fill out that survey, I'd really appreciate it. That'd be fantastic. Also, if you want to follow me and Cameron on X.com, you can do that, Scott Thompson CS or at Cameron May CS on the X.com. All right, so now we've gone through the posture. Now is the next step. And Cameron, if you go up and grab, there's a sector grid, okay? And so I'm going to show you what the grid looks like. Cameron will post that that link in there. But like this is just another cool tool, okay? This is another cool tool to have in your toolbox of building your market or your stock portfolio. Is this sector grid. Okay, and so what you'll notice here is it has the name of the sector, which is just so convenient because the way that the Thinkorswim has these different names in there, they're not intuitive names. Now, once you maximize these, you can see the name and get a little idea. But what's on this chart is you have your name of the sector, and then you have today's, this is just today's price action, up or down. So like energy is up 2.26, materials was down 1.18%, industrials up 0.14%, and so on. Okay. Now, again, you've got that link that's in there. Cameron just posted it in. For those of you watching the recording, it'll be there in the description. So I'm going to right click and maximize this. And I'm not going to go through every single one of these just for time. But if you maximize the cell, what you'll see is you just have a regular candle chart, okay, on the screen. And then you have this indicator called relative strength, and it's comparing itself to the SPX. So when we're doing top-down analysis, we're trying to identify what's going on in the market, long-term bullish, short-term neutral on the SPX, intermediate bullish, basically long-term bullish on the NASDAQ, intermediate neutral on the NASDAQ. And I don't think we did the short-term. I don't know if we looked at that chart or not, but that was kind of neutral as well. And so, if your portfolio is not performing like you'd really like to see it, well, that's because we're seeing some of that neutral posture coming in. And the question starts to come up as well, what sectors maybe are giving some opportunities when the market's kind of chopping around a little bit. And so this part of this top-down analysis where we're looking at the sectors, really all we want to do is look at where this blue line, look at the direction it's going, okay? Don't pay a whole lot of attention to the numbers. I mean, you know, again, Cameron does a great job of talking about relative strength in many of his videos. We're going to keep this really simple. All we're really doing is we're just looking at the direction this blue line's moving. And so if it's rising like this, what that basically means is this sector, in this case energy, is outperforming the S&P 500. Okay, and if you click the arrow, we would look at materials. Which direction is materials going? Well, materials is outperforming the S&P 500. Okay, we click over here. This is industrials. Which direction is industrials going? Well, it's going up on the blue line, so industrials is outperforming the S&P 500 on this 3-month time frame. And you could do that now with each one of these sectors, okay? And again, I'm not going to go through all of them, but you can kind of get an idea. Consumer discretionary, well, this one's been kind of flat, right? You know, up and down, oscillating back and forth. And over the last few days, consumer discretionary is underperforming the S&P 500. So that's what that means, okay? Now, here's kind of the fun part is, you know, taking a look at this and trying to figure out, like, you know, which one's outperforming and which one's underperforming and so on. What if there was a way that at a glance, you could see what the sector has done and how it compares to the S&P 500? Well, let me show you kind of a cool trick. All right. So what I did is I went over here to my watch list, and Cameron, if you can go grab that 3-month performance or 3-month percent change script and post that one in there. But like here, if you pull up the watch list, sector indices, and go to just right here, public, it has the sector indices watch list. Okay. And then what I did is I took this watch list and I added the SPX to it so we could kind of do a comparison. So what I'm going to do is I'm going to detach this watch list so it's just a little easier to see. Okay. And I'll make it a little bit wider. And first off, they have the description here already. This tells us which one is doing well. And then, like I said, I just recreated that watch list and added the SPX here to it. And this tells us our percent change for what? What's this column tell us? Percent change tells us the percent change for today. And so what we're doing when we're doing the sector analysis is we're taking a look at which sectors are outperforming, and you can do this on multiple time frames, but we're going to look at the last 3 months. So what I did, and Cameron just posted that link in there. Again, go up to setup, open shared item, and just grab, post that link in here, and then import it. And then when you do that, let's go over here to the watch list page that I just kind of hid. Okay. On this watch list, what you want to do is go to this gear and click on the gear and click customize. Okay. And then right, if you do this, like, it should be up there near the top, because right there, that's if you name it the same thing, 3-month percent change, click on that, click add, and that'll put another column on our display for watch list. And we click OK, and hopefully this will load for us while we're talking. Okay. So what this does is now it tells us the percentage return over the last 3 months. And what I'm going to do is sort by that percentage. And see the SPX, again, I added that to the list, and I'm going to click there. And so what we're really trying to do is just identify, which ones are outperforming or underperforming. Now, right here, we have it, from underperforming. Utilities is down 7% in the last 3 months. The S&P looks like it's up about 3.8%. And so if I resort that from low or high to low, what sectors now, okay, let's do this together. This is that top-down analysis. We're trying to ultimately get to where can I find some stocks that might be doing better than the market's doing, okay? So here we have our list. Now, what sectors are outperforming the S&P 500 over the last 3 months? Well, we have energy, healthcare, materials, communication services, industrials, and consumer discretionary. Okay, there's 5 or 6, it looks like, that are outperforming the S&P 500, and then there's about 5 that are underperforming right now. All right. Now, I just think this is just a really cool addition to our toolbox, is having this, because I don't have to now go look at all of those individual charts. I can just go here, and how fast is that? And now, so the sector compare, usually when you're doing top-down analysis, what most investors will do is they'll take the top 3 sectors. Okay, so let's pull up that watch list again. Let's identify the top 3. What were they? So the top 3 sectors are energy, healthcare, and materials. So I'm going to write those over here. Okay, energy, healthcare, and materials. All right. Now comes the fun part. So there's a couple different ways you can do this, but what I want to do now is to show you a cool scan. Okay, Cameron, if you can go up and grab that, grab the 2 green arrows scan. Now, when we went through our 8-lesson series, I introduced a plan called the 2 green arrow plan. It's a really simple plan that uses a 50-period simple moving average and this MACD histogram that you see on the chart. And basically we're saying, you know what, if a stock is in an uptrend and it's above that 50-period moving average, and when the MACD turns green, we're going to call that a buy signal. And we're just going to buy and hold these as long as that trend is in place. And we're even going to give it a little wiggle room. If it closes below the moving average, we're going to set the stop like 3% below that low to see if it'll still stay in the trend or the trend will resume. And so we've been doing that since June 9th last year. Okay, and so I've got a portfolio of that. We got stopped out of a few things today, but overall, this is our existing portfolio. And because we've got stopped out of a few things over the last few weeks, I knew I want to add some positions. Okay, so again, the overlying topic today is top-down analysis. It's part of, or a bonus session for lesson 5, what to buy, and we're walking through this way of choosing a stock. And now comes the really fun part, because we're going to do a scan in these sectors. All right, so let's check this out. Now, as you're aware, if we're going to use a study in our scans, we actually have to go to the live version. Our live paper money is the only place where the studies actually work. And so I have this other, demo account that's kind of on the live side of the paper money. And these are the components. It's a really simple scan. Okay, we're looking for stocks that are trading above $20. We're looking for volume of 500,000. Now I'm gonna I'm gonna leave that in there running this scan. I don't know, this one may not work because the market's now closed and it may not record the volume, but hopefully it still does. But what we're looking for here is we're gonna run a scan in the sector that we know is outperforming the S&P 500. And we're not only going to scan in that sector, but we're also going to look for stocks that have a buy signal based on those rules that we set up, which again is a green arrow, or the price is going to be above the moving average. So we did a moving average scan, the close at least 1%, and that could be basically 0.1%, doesn't matter, to something above the 50-period moving average. And the MACD, the lengths, or the things that make up the histogram, are above 0. Okay, if we scroll that over, you'll see just greater than 0. That just assures us that the stock's above the moving average, and the MACD has a green arrow on it, and the histograms are going to be above 0. Okay, so again, I don't know if the volume part of this will work. Let me see if I will scan for us. Okay, good, it did. Okay, now the last part here is before you scan, go into this scan in and go down to where it says public, or actually go down to industry and go to energy, and then just select all energy. Okay, and so when you scan that, there's actually 57 stocks in the energy sector, okay, that actually are above the moving average. Now, what we have to do is go see if that moving average is rising or not. And so there were several that I looked at in the energy sector that were rising, had 2 green arrows on them, but I wanted to pick OXY. So I'm going to go over here to our chart, And let's type in OXY. This is an energy stock. And the reason I like this one is it was coming off a downtrend and the moving average has just started to tick up. And it looks like today we got a confirmation of a nice breakout above some horizontal resistance. Okay. So what I want to do is place this trade based on that. And then we'll go run the scan again and we'll talk more about that. Okay. So here's our plan. Our plan is, is the moving average green? Well, the last arrow we see on the right side, let me zoom in here a little bit. The last arrow we see is green, and all that really means is that the moving average or the price is above the moving average. All right. Is the MACD green? Well, the MACD is green, and we actually got some green arrows back here, but you can see the moving average is really mostly flat through there. And we just started ticking up. And that's one of the rules that we decided at the very beginning of this is we'd like to see that 50-period moving average rising. And so usually when you're coming off a bottom like this, it may take a little bit of a breakout like we're seeing today in order to get that 50-period moving average, which is really quite slow to tick back up. And so what we're going to do is we're going to buy this based on our rules. Now, our rules are pretty simple. 2 green arrows, we got that. We set the initial stop 1% below the moving average, and the moving average is at 41.42. So I'm just taking a hand calculator here. 41.42 times 0.99, and our stop's going to be at $41 even. Now, some people, including me, I don't like using exact equal numbers for this. So, I'm going to say, let's go $30 or $40.98 because I don't like using the double zero numbers. So on energy, and this is an example, not a recommendation. OXY, we have an entry. We're just going to use the current price is 44.32, and our stop is going to be at 40.98 because we don't want to use 41.00. And that's just my preference that you can do whatever you want. Okay. Now, how many shares should we buy? Well, in our sample portfolio, we're pretending that we have like a $10,000 account. We're new to investing. We don't have a lot of money to invest. And so we're going to invest a maximum of 5% of our portfolio in any one position, which if we had $10,000, that would be $500 per position. And so again, if we take our calculator, $500 divided by the current price of 44.32. And we probably could have calculated that in our head, but it's late in the day and my head doesn't work anymore. So that's 11 shares. All right, let's go place that trade in here. And this will be for tomorrow because the market's closed. So we're going to come in here, OXY. We're going to right click on our ask price. We're going to do a buy custom with stop. We're going to adjust our shares to 11 shares. We're going to link that up here with that little kind of broken chain link. That'll give us 11 shares down here. Now, this is picking up this ask price from, kind of the aftermarket numbers. And so we're going to go adjust it to the last. Okay. So this will be a limit order 44.32. And a limit order there's no guarantee that'll fill. It has to be at 44.32 or less for the order to fill. So we'll make that good till canceled. So might fill tomorrow. If it opens up a little higher, would have to pull back a little bit to fill. And our stop order, we're going to put in there $40.98. And we want that good till canceled. And then we hit confirm and send. And we will review the order. This says confirm and send, not send and send. Okay, buy 11 shares, 44.32. Maybe check our notes. Stopped 48 or 40.98, check our notes, 11 shares, double check your buying power effect. This is how much money's tied up in the trade. And then we're going to move this to our 2 green arrow group. All right. And the stop, not guaranteed to fill at that price. That's going to trigger a market order. And it could be filled much lower than that. We're aware. So we send that order off and now we're done with our energy stock. Now you guys for homework, you can go look at a whole bunch of more of the energy stocks. All right. Now let's do all this again. Okay, let's do all of this again. And I see a question here. Con is saying, why does that 2 green arrows when the small green arrow is below the large red one? It's just how the chart works. These green and red arrows, they're always going to be at the bottom of those candles. And what triggers that green arrow, just so you're aware, is when the stock goes above the moving average. So like the next day it closed above the moving average, green arrow. If the next day it closed below the moving average, it would be a red arrow. But in this case, it hasn't gone red since then. And so the green arrows are green until they turn red. Okay, great question. All right. All right. So now let's take a look. So how did we do this, right? How did we do all this? We went to the market posture. We looked at the sectors. Now, what's another sector that was outperforming? Healthcare. So let's go run that same search in healthcare and see if there's any stocks we recognize, number one, or number two, want to trade perhaps. All right, so let's go over here. We're going over to our, again, the search only works in that live account, but just quick review. 20 bucks or more on the last trade, 500,000 shares of volume. We want the stock to be above the moving average, so it has that green arrow. We want the MACD to be green. And so really all we're doing is looking at the stocks and making a comparison of which ones we think are best, okay? And you could do some additional analysis on those. I went through and looked at several of them, so I have one to pick out. But how do we get into healthcare? What do I need to do from here? Well, we're going to scan in by industry, healthcare, and I mean, we could pick individual sectors here or industry groups if we wanted, but we're just going to do all healthcare, and we just run the scan again. Okay, now we have our healthcare stocks. Okay, so you may not recognize some of those. If we sort by higher prices, you'll probably see some that you recognize. Cardinal Health over here, ALGN, Guardant Health, AZN, some of those. And if we scroll down a little bit, you see that alphabetically here. Let me show more. So let's run that scan again because the one I wanted to trade wasn't in that list there. Okay, so you guys recognize this symbol? MRK. So MRK. So again, let's do that same analysis that we did to see if it meets our buy signal. And then this will probably be the last one that we're able to do today. But for homework, you can go take a look at a whole bunch of them. And remember that there's that survey in there. Please fill that out if you get a chance. But let's go take a look here at Merck on our chart, and let's do our analysis there. So MRK is the symbol. This is a stock that's in healthcare that was outperforming the S&P 500. And what do you notice? Well, number one, you should notice the 50-period moving average has been rising for quite a while. You know, this broke out of a channel that it had kind of back here, bounced around a little bit prior to earnings, and then took off like a rocket. And so we've had some really nice upward movement. The reason I chose Merck today is because Merck has one of those extra buy signals. Oh, this was green earlier. Oh, we're going to have to set up a conditional order because the MACD technically is red. You guys see that? So the MACD is red here. I'm going to have to choose a different one. Let me show you how to set up this order just for time to get in when the MACD most likely will go green, okay? So the MACD is driven by price. If price goes up again, then the MACD will probably turn green. And so what I'm going to do is I'm going to put an order just above all of this congestion right in here. This last, 5 or 6 days, it's kind of struggled to get above this 111.50 on up to 112.90. And I can almost guarantee that if it goes above 112.90, the MACD is probably going to go green, but I don't want to wait that long. So I'm going to put a conditional order that will trigger if it goes above 111.46. And we'll just say if it goes above that by like 0.5%. So how do you figure that out? Well, you take 111.46 times 1.005. That's like 0.5%. So that'd be like 112.01. So I'm going to set up an order to get in this. And the assumption is here, and you could check this on the chart tomorrow, but I didn't see that was a red arrow on Merck. I just saw the bounce over here. And you know, this is a valid buy signal for a lot of shorter term traders. Even longer term investors will use that as a buy signal, but it just doesn't quite meet our rules yet. So we're going to set a conditional order to get in if it keeps going up tomorrow, under the assumption that if that happens, then the MACD will probably turn green and we'll be buying it as the MACD turns green. That's the kind of the thought process here. All right. So the moving average we see is at 99.81. So let's go down over here on our left side. Let's do healthcare. And we picked MRK. So it's bouncing, not two greens yet. So we're going to do a conditional order, or what's called a buy, stop, limit order to get in. And we're going to do 112.01 is what we calculated, about 0.5% above that little congestion area. And then we're going to max it out. Like if this were to open up at like 120 tomorrow, that buy, stop, limit order would trigger, but we have to cap it out. You know, what's the most we want to pay for this stock? And I'm just going to add, say, 20 cents to that, 112.21. So this will be our range within which we have to buy the stock. If it gaps above 112.21, it would have to pull back a little bit before our order would fill. And it's possible that we may miss the order altogether. If it goes to like 112.22 and then just keeps going up from there, we would miss the trade. So, you know, make sure you keep an eye on that if you have a chance to watch the market for that breakout. Now, 98 or 99.81 is where the moving average is. So we're going to put our stop at 98.81. Okay, and again, not a recommendation on these, just these are examples of applying those sample rules. So we're going to go over here to the trade page. We're going to type in MRK, and this one's a little bit different. So watch how I do this order, and we don't have to sit and watch the market all day. We can let this order work for us. Okay, first one, right click, buy custom with stop. That's the same. You know, we can do what, 4 shares just for that $500 maximum. So we do 4 shares. Okay, we don't want a limit order, because if we do a 112.01 limit order, it'll fill just anywhere below that. We're trying to catch the momentum if and when it breaks through that congestion that it had the last 5 or 6 days. So we're going to change this to buy, stop, limit. Our stop is the trigger. It says, Mr. Broker, stop. Don't do anything until it goes above 112.01. And then don't pay any more than 112.21. And we'll just make that good till canceled here. Oops. So 2-1. All right. And then we said our stop was going to be at 98.81. Why 98.81? Well, that's just our rule based on 1% below the moving average. We want that to be good till canceled. And we hit confirm and send. Review the order. Check our entry price, 112.01. Check our stop, 98.81. Check our buying power here. Recognize the stop's not guaranteed to fill at that price. It just triggers the market order. And then we're going to put that in our green arrow group, send that off, and now we have a working order for tomorrow. Okay. And again, we're trying to catch the momentum as it breaks out. Let's see. Dram says, would you please show the scan again so I can see it? So the scan is on, again, this one only works because it has it has those moving averages there. So as we wrap up, everyone, hopefully this was helpful for you to go through, and we opened up your toolbox, we loaded it up with tools, and we showed you how to use those different tools. And with this concept of top-down analysis, where you're looking at the market, take a look at the sectors, identify which sectors are outperforming, run a scan in one of those sectors, and then identify some stocks that have a buy signal based on whatever your rule set is, and then position size and set those trades up based on whatever your rules are. And we did that with our 2 green arrows. And so hopefully that's helpful for you. Again, there's a survey in the chat. I want to give a shout out to Cameron for posting all those links that were in there. Hopefully it'll be helpful for you to go through that. So have a great day, everybody, and good luck in your trading. We'll see you.